DIPLOMA is a retail business that operates as a mini market. It is established as a sole proprietorship and is fully owned and managed by Luna. The business is strategically located in Kampung Jati, Gombadak, Kuala Terengganu. This location is surrounded by residential areas and students, which provides a strong and sustainable customer base. DIPLOMA officially started its operation on 1 April 2024 with an initial capital investment of ringgit. DIPLOMA focused on providing a wide range of daily necessities under one roof. The products offered include groceries, beverage, frozen food, snack and canned goods, and other fast-moving consumer goods. The main target customer are residents of Kampung Jati, university students, and workers in the surrounding area. The strategic location allows customers to shop conveniently without traveling to larger supermarkets, which help them to save both time and transportation costs. The main objective of DIPLOMA is to become a trusted and well-known mini market in the local community. The business aims to provide convenience, fair pricing, and friendly customer service, while building long-term relationship with customers. In addition, DIPLOMA strives to achieve steady sales growth, maintain positive cash flow, generate sustainable profits, and establish strong relationship with suppliers to ensure a continuous supply of inventory. The mission of DIPLOMA is to offer affordable products, provide excellent customer service, and create a pleasant shopping experience. To achieve this, the business maintains competitive price, ensure product availability, and keeps the store clean, safe, and well organized. Customer satisfaction remains a top priority through friendly service and efficient checkout process. The vision of DIPLOMA is where convenience meets value every single day. This vision reflects the business aspiration to become a trusted neighborhood mini market that customers can rely on for their daily needs. DIPLOMA aims to build a strong reputation based on reliability, affordability, and consistent service quality. Therefore, DIPLOMA plans to expand its product variety, introduce promotion campaigns, and improve store facility to enhance customer experience. If the business achieves stable financial performance, Luna plans to reinvest profits and potentially open additional branches in nearby residential areas.
I will present the financial overview of DIPLOMA for its first month of operations starting April 1st, 2024. The business began with a capital investment of 60,000 ringgit in cash and a 10,000 ringgit bank loan. Throughout the month, DIPLOMA actively built its foundations. We invest 9,000 ringgit in equipment, including shelves and refrigerators, and purchased 6,800 ringgit worth of merchandise inventory. In terms of performance, we successfully generate a total revenue of 15,500 ringgit, driven by both cash sales and credit sales to Abu Bakar Mama, which has now been fully recovered in cash. On the expense side, major cash outflows included 30,000 ringgit for salaries and a 15,600 ringgit rent payment. However, applying accounting adjustments, 7,800 ringgit of that rent is recorded as a prepaid asset for next month. Additionally, we accounted for a 1% monthly straight-line depreciation on our equipment and closed the month with an ending inventory value at 2,000 ringgit.
Next, I will explain the general journey of DIPLOMA for April 2024. On the 1st of April, Luna invested 60,000 ringgit cash into the business. This increased the business cash assets. So, cash was debited, while capital was credited to record the owner investment. On the same day, DIPLOMA also received a 10,000 ringgit loan by check. The bank account increased because money was received, while loan was credited to record the liability. On the 2nd of April, the business purchased supplies worth 2,000 ringgit in cash. Supplies were debited because they are business assets, while cash was credited. On the same date, DIPLOMA also purchased shop shelves worth 5,000 ringgit in cash. Since the shelves are long-term assets used in business operations, shop equipment was debited and cash was credited. On the 3rd of April, DIPLOMA purchases 4 refrigerators costing 4,000 ringgit on credit from Senhua Electrical Appliance, Sendirian Berhad. Shop equipment was debited because asset increased, while account payable was credited because payment had not yet been made. On the 4th of April, the business purchased inventory worth 4,000 ringgit on credit from Tesco Wholesale Sendirian Berhad. Purchases were debited to record the increase in inventory, while account payable was credited to record the amount out. On the 6th of April, DIPLOMA purchased additional inventory worth 2,800 ringgit in cash. Purchases were debited and cash was credited because payment was made immediately. On the 7th of April, the business paid 750 ringgit for transportation expenses in cash. Transportation expenses was debited because it is an operating expenses while cash was credited. On the 10th of April, the DIPLOMA made cash sales of 5,000 ringgit. Cash was debited because money was received, and sales was credited to recognize the revenue earned. On the 12th of April, the business sold merchandise worth 7,000 ringgit on credit to Abu Bakar Mama. Account receivable was debited because the customer had not yet paid, while sales was credited to recognize the revenue. On the 15th of April, the DIPLOMA recorded another cash sale amounting to 3,500 ringgit. Cash increased and was debited and sales was credited. On the 18th of April, the business paid 50,600 ringgit in rent by check. Rent expenses was debited because rent is an operating cost, while bank was credited. On the 20th of April, utilities expenses amounting to 3,500 ringgit were paid by check. Utilities expenses was debited and bank was credited to record the payment. On the 22nd of April, internet expenses of 180 ringgit were paid by check. Internet expenses was debited because it represents a business expenses, while bank was credited. On the 24th of April, Delhi Mart paid 600 ringgit for marketing expenses in cash. Marketing expenses was debited while cash was credited. On the 25th of April, insurance expenses amounting to 2,000 ringgit were paid by check. Insurance expenses was debited and bank was credited. Finally, on the 30th of April, salaries of 30,000 ringgit were paid to employees by check. Salaries expenses was debited because it is an operating expense, while bank was credited to record the payment.
Next, I will explain the trial balance for Daily Mart as at 30 April 2024. A trial balance is a list of all account balance taken from the ledger at the specific date. Its main purpose is to verify that the total debit balance are equal to the total credit balance. For Daily Mart, the total debit balance is 134,718 and the total credit balance is also 134,718 ringgit. Since the both sides are equal, this indicates that the bookkeeping records are mathematically correct before adjustments are made. On the debit side, the major accounts include cash of 57,350 ringgit, salaries expenses of 30,000, rent expenses of 15,600 ringgit, shop equipment of 9,000 ringgit, and account receivable of 7,000 ringgit. On the credit side, the major accounts include capital of 60,000, bank of 41,280 ringgit, sale of 15,500 ringgit, loan of 10,000 ringgit, and account payable totaling 8,000 ringgit. Although the trial balance is balanced, some accounts still require adjustment to ensure that the financial statement reflect the correct account balance at the end of the accounting period. After preparing the trial balance, adjusting entries were recorded on 30 April 2024 to ensure that all accounts are updated accordingly to the actual balance of accounting. There are 4 adjusting entries made by Daily Mart. The first adjustment record are the collection of an outstanding receivable from Abu Bakar Mama. Cash is debited by 7,000 and account receivable is credited by 7,000. This entry increased the cash and removed the amount owed by the debtor because the payment has been received in full. The second adjustment record payment made to Senghua Electrical Appliance Sdn Bhd for goods purchased on the credit. Account payable is debited by 4,000 and bank is credited by 4,000 ringgit. This entry reduced the liability owed to the supplier and decreased the bank balance due to the payment made. The third adjustment record the prepaid rent for the following month. The prepaid rent is debited by 7,800 ringgit and rent expenses is credited by 7,800 ringgit. This adjustment is made because of the rent paid relates to a future accounting period. Therefore, it should be recorded as an asset rather than the expenses for the current month. The final adjustment record monthly depreciation of shop equipment. Depreciation expenses is debited by 90 ringgit and accumulated depreciation is credited by 90 ringgit. This adjustment recognizes the gradual usage and wear of the equipment over time and allocate part of its cost as an expenses for the month.
For adjusted trial balance for Daily Mart as of April 30, 2024, this statement reflects all account balances after necessary adjusting entries have been made, ensuring that our financial position is accurately stated for the period. As we can see on the slide, the trial balance is successfully balanced with total debits and credits both standing at 134,870 ringgit. Looking at our main liquid assets, our cash account shows a strong balance of 64,350 ringgit. For fixed assets we hold shop equipment valued at 9,000 ringgit with an accumulated depreciation of 90 ringgit, which matches our depreciation expense for the month. Moving on to our liabilities and equity, the business is supported by an owner's capital of 60,000 ringgit and a loan of 10,000 ringgit. We also note an account payable to Tesco Wholesale Sdn Bhd of 4,000 ringgit. However, an important point to highlight is our bank overdraft, which stands at 45,280 ringgit. This indicates a heavy reliance on short-term bank financing that we need to monitor closely. In terms of operational performance, Delhi Mart recorded sales revenue of 50,500 ringgit against purchases of 6,800 ringgit. Our operating expenses are heavily dominated by salaries at 30,000 ringgit, followed by rent and prepaid rent at 7,800 ringgit each, and utilities at 3,500 ringgit. While other minor costs include transportation, internet, marketing, and insurance expenses.
The statement of profit or loss shows the financial performance of Delhi Mart for the month ended 30 April 2024. During the month, the business generated total sales revenue of 15,500 ringgit. After taking into account the cost of goods sold of 4,800 ringgit, Delhi Mart achieved a gross profit of 10,700 ringgit. This indicates that the business was able to generate profit from its core sales activities before considering operating expenses.
However, the business incurred significant operating expenses throughout the month. The largest expenses were salaries amounting to 30,000 ringgit and rent expense of 7,800 ringgit. These expenses were necessary to support the daily operation of the business, including maintaining staff and operating the business premises. In addition, Delhi Mart also incurred utilities expenses of 3,500 ringgit, insurance expenses of 2,000 ringgit, transportation expenses of 750 ringgit, marketing expenses of 600 ringgit, internet expenses of 180 ringgit, and depreciation expenses of 90 ringgit on shop equipment. As a result, the total operating expenses amounted to 44,920 ringgit, which was substantially higher than the gross profit earned during the period. Consequently, Delhi Mart recorded a net loss of 34,220 ringgit for the month. The main reason for this loss was the high operating costs, particularly salaries and rent, which accounted for a large portion of business expenses.
Although the business experienced a loss during this period, the situation is understandable as Delhi Mart is still in the early stage of its operation. Many new businesses incur higher expenses initially as they invest in resources, employees, and facilities to establish a strong foundation. By improving cost control and boosting revenue, the business will be in a better position to achieve profitability and sustainable growth in the future. Next, I will explain the statement of financial position of Delhi Mart as at 30 April 2024. This statement shows the financial position of the business by presenting its assets, liabilities, and owner's equity.
Delhi Mart has total assets worth 85,060 ringgit, comprising both non-current and current assets. Among the total assets, cash is the most significant asset at 64,350 ringgit, indicating that the business has sufficient cash available to support its operation. In addition, the company owns shop equipment with a carrying amount of 8,910 ringgit after depreciation. The business also has closing inventory worth 2,000 ringgit, supplies worth 2,000 ringgit, and prepaid rent amounting to 7,800 ringgit. These assets will provide future economic benefits to the business. Among the liabilities, the company has a loan of 10,000 ringgit, accounts payable of 4,000 ringgit, and a bank overdraft of 45,280 ringgit. The bank overdraft is the largest liability, indicating that the business relied on short-term financing to support its operation during the month. The owner's capital is 60,000 ringgit. Due to the net loss incurred during the period, the owner's equity decreased by 34,220 ringgit, resulting in a closing equity balance of 25,780 ringgit. Overall, Delhi Mart has established a reasonable assets base and maintains a strong cash position.
However, the business should focus on improving profitability and reducing its reliance on borrowed funds and bank overdraft to strengthen the financial position in the future.
For the reflection part, we choose a retail mini market because it sells essential daily products such as groceries, beverages, snack, and household items. These products are always needed by customers, creating consistent demand and stable income. The business is also easy to manage, suitable for beginners, and has strong potential for future growth. The most difficult part of this project was preparing this financial statement. We had to ensure that all transactions were recorded and classified correctly while carefully checking every figure to avoid error. The process required a high level of attention to detail because even a small mistake could affect the accuracy of the final report. However, this experience helped us improve our accounting knowledge and understand the importance of accurate financial reporting. In addition, we learned that the accounting circle play an important role in helping business owners make decisions. By recording, analyzing, and summarizing transactions into financial statement, owners can clearly understand the business's profit, expenses, assets, and liabilities. This information helps to identify strengths and weaknesses, plan for future growth, and make informed business decisions. Overall, this project enhances our understanding of the accounting circle, and it is important in managing a successful business. In conclusion, this project successfully demonstrates the application of the accounting circle in a business environment through the case of Daily Mart. All business transactions were recorded, classified, and summarized systematically to produce accurate financial statement. The project highlights the importance of proper accounting practice in monitoring financial performance, controlling business activity, and supporting decision making. Through the assignment, we gain valuable knowledge and practical experience in applying accounting concepts, which will be beneficial for our future study and career in the business field.